Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, February 27th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You notice here that the previous session, while it did develop a pretty strong bottom for a while and had ran away from that low, by the end of the day it had turned down, and it turned down quite a bit, closing back at or just below that 3100 level. That's a significant turnaround, and again, that's what we're looking for. We're looking for some sort of significant strong low that we can be confident is the low. Once we can find that low, the idea is to snap it back toward the midpoint of the impulse sell-off. Whether that's going to find the low today or tomorrow or the next day, what tends to happen here is you see an extreme sell-off that's occurred. You see the current last price and the low of the month are very close to each other with 1 day to go, including today. That would be 2. So we may see another continuation here, and then for March we may see some sort of major washout and then perhaps a bounce back toward that midpoint. So again, a move back toward 3250 to 3230 could easily be in play, or 3225 to 3250 whenever we find that low. But again, we have to be patient because this market could continue to slide here on panics over the coronavirus and the spread. All right, let's take a look now at this LVN real quickly. One last point. You'll notice here, this is the FOMC key level from October 30th. It went bid and never came back to it. Right now, it appears very likely that we're at the very least going to test that level. That's 30.2875. So we still may have at least another 40 handles down just to get to that level. That's where you start to see very thin part of the profile go bigger here. That may be the point where we start to see maybe a bit of a bounce, at least on an intraday basis. So again, 30.28 could be the next major level down here if this down move continues the way it is. So if we take a look now at the NQ, let's bring that up here. Again, very, very clear downswing we've seen here lately. The ES looks almost more exaggerated, but this is significant. Almost 1,000 handles here of range, or actually over 1,000 here. This is a little less there, but from here to there, it certainly is. And again, that's a huge move in just 5-6 days now. And whenever we do find that low, we could see an easy snapback right back toward the midpoint of that move. You can see the LVN here at 9,300. That's going to be a good spot here for a bounce back target if we find a strong low. Again, the next major level down might still be below because we have the FOMC key level from December that still needs to be retested. That's 83 half. We also have the 200 period average coming up below. That could provide some support. So this move may not be over. We still may see more downside toward those targets. But again, whenever we do find that strong low, it's going to be high probability odds that we get a bounce back toward that midpoint. All right, let's take a look now at crude oil. Another one here that's taken a hit on, again, coronavirus fears is crude. And this one was on its way much higher, but it opened Sunday evening below that Friday low, dropped hard, next day dropped, and we're just seeing a continuation on a 4-day basis that is about as high of a 4-day move as we've seen in a long while. This is based on 5 days, and you can see right here it's this 5-day range is 175% of average. And if you go back, there's several times it gets this high, in these areas. And again, whenever you tend to see those high range type of 5-day periods, you want to go back and study what happens after them, right? When you see this one was significant, what happened after that? It turned down. When you see this one was significant, what happened? It actually continued. Many times what you'll see is after a big 5-day range, you go narrow, and then you either see a continuation or a reversal. And so that's one thing to keep in mind, is that the thing that typically happens is after a high range, you see it go narrow. High range, it went narrow here. After this big move, we may see a big rejection, and then we could see several days, 3 or 4 days of accumulation, followed by what could be a bounce back. So something to keep in mind here. But this thing breaking through 49 the way it is, as I've mentioned before, there's nothing below for support until the next major key level down, and that's 42.5. So right now we are headed toward 42.5 based off of how this thing is broken down. Any bounce back toward 49s is likely a selling opportunity for a continuation down, as this has violated significant support now. Lastly, let's take a look now at gold futures. You'll notice with gold, this one has pushed much higher, but it hasn't really exploded here in the last couple of days. It put in this strong top and is holding. It held the 8-period average. That's what I've been mentioning this entire time. When it gets to the 8-period, it tends to be a great buy-in opportunity, especially in this current market. We have a very clear uptrending market here, and while we may see more upside at some point, this market has been about short-term spurts higher, followed by periods of rest. So as long as this thing can hold 1600, we could see more upside ahead. But we could see a bit of a sideways digestive type of price action first. All right, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.